Market Rebellion's chief market strategist, Marc LoPresti, and Henyon & Walsh's CIO, Kevin Mon. I don't know, Mark. Look at the busy bees of this economy where we still have lots of jobs, lots of job creation, not to mention a consumer that's holding up. So let's translate this to the stock market and people watching right now thinking, well, if the markets just keep going up, should I keep piling in?
Well, it depends on where in the market, right? And to Kevin's point, we are definitely starting to see the impact of inflation take hold of that runaway consumer spending. You'll remember, Liz, last summer I was here on the show talking about that was the last time, the last summer of George, where people were just going to spend like there was no tomorrow. Well, that continued. But a lot of the data that we're looking at now is indicating that that party may have actually come to an end. Yep. One of the things we saw, pandemic-era savings, how much people socked away, whether it was helicopter, stimmy money, or what have you, that's depleted. Credit card balances, again, breaking highs every time that number comes out, historically new levels. And the usage of buy now, pay later as an alternative to the credit cards, because the buying power is just not there anymore, is just continuing to, quarter after quarter, show new levels of usage. So that indicates to me that the savings is gone, the credit cards have largely run out. So that spending is going to slow, which is, of course, what the Fed wants to see.
Yeah, look at the buy now, pay later stocks. They look like they would be at an advantage.
Well, certainly we like the buy now, pay later names, AFRM, Block, PayPal, maybe even Apple. That might be the side of the business that pulls them out from their iPhone doldrums and the competition that they're facing in China. We love anything data, no surprise to anybody that follows myself or Market Rebellion. Two of the best performing stocks in the market today, Klaviyo and AppLovin, I think, both of them up 15 and 19% respectively. Those are on the B2B software side.
Gets dinged.
Consumer discretionary, and particularly consumer discretionary, over-leveraged consumer discretionary with the weak balance sheets that have, despite perhaps their best efforts, not set up for a higher for longer cost of capital in terms of that their corporate borrowing rate, and folks that sell things that people don't really need. I think that's part of why we got the guidance from Roblox today. If you're starting to cut back on discretionary spending, using fiat real dollars to buy funny money might be a place that you start.
Yeah, I always wondered about that. Roblox is getting hit today. What about the Nikes of the world or the fancy pants Lululemons?
Yeah, I mean, we have seen those that in any discretionary spending pullback, those are names that tend to get hit. So I think as we look at earnings for the next couple of quarters, those are names that I would have a bearish outlook on.
Mark, Kevin,